First day of trade in the fiscal year, the rupee has remained range-bound, ending the day at 54.26. It's the CAT numbers which are at record highs weighing onto the Indian unit. Meanwhile, bond yields also rose to their highest level in 3 months as investors remain concerned about the future course of monetary easing. Let's get in then Mr. N.S. Venkatesh. He's Treasury Head, IDBI Bank, and joins us live for the segment. Mr. Venkatesh, hi, what's your reading on the CAT numbers, the impact today, and of course the bond yields at 3-month highs as well?
Good evening, Manisha. The CAD numbers were really high at around 6.7%. It is really high. The market expected somewhere around 6%. It came at around 6.7. Having said that, the market believes that maybe that is the peak, and going into this quarter, the CAD numbers should start coming off. But still, for the entire year, the total CAD numbers should be at around 5.4, which is alarmingly high compared to the 2.5 to say around 3%, which is what RBI has always been saying. It is good for the sustainable growth of the country. So definitely it puts pressure on the rupee. The exports are not picking up to the extent that we really want that to pick up. The import is inelastic because it is essentially the oil which is getting imported. So to that much extent, definitely there is a pressure on the rupee.
Mr. Venkatesh, just a few minutes back there was the news that Cyprus finance minister has resigned. How do you read that as an impact on euro and the Indian rupee in turn?
The euro partially strengthened today because of the little bit weak numbers of ISM in US and also the PMI numbers which had come out yesterday, which supported the euro. But this news of Cyprus minister resigning will definitely have a little bit of impact on the euro, and I expect that the euro should weaken. If that weakens, definitely it will have a negative impact for the rupee.
How would you look at the dollar index at this point in time? Because we haven't seen any headwinds coming in for that one as well. After the initial run-up, 83 continues to be a kind of resistance for that.
I agree, because essentially the dollar index has not moved very much. But having said that, I believe that all these geopolitical matters and maybe the global external factors will make maybe the dollar into a safe haven again on a risk-off mode. So to that much extent, I think the dollar should again strengthen.
You know, there have been, the finance minister, of course, is traveling to Tokyo, but he has been making that statement that whatever happens, the government is committed to reforms going forward, and that in turn seems to be supporting the Indian rupee as well. So on one side, while we still are looking at CAD and a lot of issues there, the reform assurance, do you think that really seems to be working for the rupee?
It should work for the rupee in the sense that the finance minister himself has said that we should be getting around $75 billion in capital receipts over the next 2 years to finance the CAD. So to that much extent, definitely we are seeing the steps that are being taken by the government as well as the Reserve Bank as well as the SEBI to promote inward flows of foreign currency either through the FDI route or the FII route. So I think what is happening is the current account deficit is getting financed through the capital account receipts to give you a positive BOP number, which we saw even in the last quarter. And going ahead, I think even in this quarter, the BOP number is expected to be marginally positive. So I think all steps will be taken to ensure that the inward remittances, let us say the ECBs or maybe the FII flows and FDI flows are attracted towards the shores of India, which will in turn support the CAD deficit. I think that could be the medium-term plan.
Vijay, getting you in the conversation as well. There's very less positive news to go by. With that, how would you want to take the rupee?
I would say definitely there is a little bit of pressure on.
Manisha, I would still maintain my view of a long dollar and short rupee because I think the rupee is gradually losing strength. Unfortunately, it's not really showing up in the day-to-day trade. But if you were to basically see the momentum which it was trading with, the kind of strength that it was showing a fortnight or more ago is not there anymore. And yesterday we talked about how the rupee had basically had 2 to 3 trading sessions to discount the very high CAD figures, because Mr. Anand Sharma had already indicated that the CAD would hit an all-time high, although the indication was 6.25% and the actual figure did come out to 6.7%. The market did have an inkling of what was coming, and therefore today you did not see the kind of reaction that one would have seen if the market had been completely surprised. Having said that, in the April futures on the currency derivative segments on the NSE, I think 55 level remains a very stiff resistance for the USD INR to overcome. If and when the 55 level is overcome, I would expect 55.30 to 55.50 to be the next stop. On the other hand, if the rupee was to appreciate in the futures segment, it will have to basically go past the 54.20 levels in the April futures. So this would be the range. I mean, 54.20 to 54.40 in case the rupee appreciates, and 55 levels, which is a very stiff resistance for the USD INR.